Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
This is the Friday, May 21, 2021 version of the Market Plus segment. Joining us now, Naomi Blohm. May 21, 2021. You want to try that one again?
No, thank you.
Or the 2021 version.
Quite a tongue twister.
We're in 2021, and we're still talking about 2020, though. I mean, it's amazing how 2 years can be so connected. You talked about it in the livestock market, about certain things are connected because we're comparing to last year. A lot of economic reports the same way. But we have an issue that started in 20 when it comes to weather, and this is where I want to start. Tim in Iowa asked us via Facebook, how many hay acres were lost to corn and beans, and how much of an impact will this have on hay prices?
I have been wondering the same thing. I don't know is the answer. We will find those numbers out in June on the acres report, but it is something to be very aware of. And right now for hay, the biggest thing to know that is that for hay stocks, we are down 11% from a year ago and down 14% from a 5-year average. So we're starting in a deficit position. And that's a big deal for our cattle producers out west, where they're in the middle of a drought and pasture conditions are horrific. So hay
just
prices,
feed them corn, that's cheap.
super cheap.
Right? You know, I mean, that's the other thing they're facing. Sorry,
yeah,
continue.
no, it's a great point. So I think the hay price is going to work higher because of the drought. And then, to this gentleman's point, yeah, if we lose hay acres to some of these other crops that have been yielding so much higher returns, then it just exacerbates the situation that much more. So something to definitely be monitoring in the weeks and months to come, without question.
Because the picture behind you has hay on the fields. Did you know that? I'm going to ask you to turn around, but it's there. See, you can kind of see it right up above in the top of where her head is. There are all those hay bales. We might see less of those in the field. You talk about the dry conditions in the west, but in the plain states, they got rain this week on some of those. In some of those spots, they are feeding hay already. Is that what's eating into that and creating that deficit a little bit?
Good question. I'm not totally sure where the specific deficit comes from, but what about the pasture conditions is that 44% of U.S. pastures are poor to very poor, and 60% of our nation's cattle herd is living and being raised in the areas where the pasture conditions are the worst. So the rain that we had this week, absolutely welcomed, without question, but most of that soil is so depleted yet that we need more rain like that to continue all summer long rather than just this one timely event, because the feed prices are just out of control right now. We are already seeing some cattle liquidation occurring. Cattle slaughter's been up the last couple weeks here, more than a six-week average type of a pace. So it's going to be a big deal. We have to really watch this.
We did talk about live cattle just a little bit, and the feeder numbers were high. Again, any surprises? I mean, we talk about comparing 20 to 21. I mean, that throws some of that numbers off, but it's been a very turbulent time in livestock in 21.
Oh, it's been, I can't even imagine what it's like from their perspective between these high feed costs, between, I think Senator Grassley said it. Grassley said
Close,
it best.
that's fine.
With, I love his adjectives when he just flat out says how the cattlemen are getting screwed on things, you know. So it's a lot going at these cattlemen right now, and between just the feed prices and the drought conditions and not getting the money that they should because the packers are taking the most of it, it's excruciating times. Well,
there was a little debate on Twitter last week following the show. Ted made a pretty strong statement about the cattle industry, and someone then responded with, but basically it's the American way. If they can make the money, if you want to beat the packer, buy their stock. I mean, that's a pretty cold, but yet there's some that believe that, and they don't have sympathy. And that's the hard thing when you have to have discussions. I'm not going to make you answer any of my rambles. You can direct those at me. Sorry. Let's do this, though. I have a question from oh, yes, a Naomi in Wisconsin is asking about what is the connection between soybean meal and dairy feed? Let's talk about a couple of your industries together.
Okay, so soybean meal actually is a market to watch very closely over the next few weeks. There's a few things happening there. Part one is that we had really good soybean meal export sales this week for this year and for next year, a little bit more than normal. Part two is that we saw in Argentina, so we know that they're not exporting beef for 30 days, but now their port workers are going to be having another strike. And so now if this continues for a longer duration of time, it's not good news for the Argentina soybean meal exporters. They're the #1 soybean meal exporters in the world. And so now if they can't get that product out, well, hey, the United States becomes an option. Part three is that in the poultry industry, when you look at the broiler production report that comes out weekly, the egg sets this week were the largest ever for like the month of May for this time of year. So we're going to be having some poultry that is going to be needing feed also very soon. So we always know that, the southeast corner of the United States, every once in a while they'll be importing grain from Brazil, and we know that. That's not a shocker to the industry anymore. But now you have the dairy market that needs soybean meal. And when you have milk production numbers up between Michigan, Wisconsin, Minnesota production was up 7%, and then Wisconsin and Michigan numbers were up 4%. California production was up 4% on this report. There's going to be a lot of demand there across the entire livestock complex for soybean meal. So soybean meal is a market that could all of a sudden explode higher due to a combination of all of those factors. And again, keeping an eye on that Argentina strike could really become significant.
Yeah, because I think there's one union that's going to strike and another one that's ready to strike as soon as that one's done. So even if you read a headline about one ending of a labor dispute, one is in the wings there. And you're almost talking, you want to get into the chickens, the chicken sandwich debate on how we don't have any meat for the chickens, for the chicken sandwiches at all these places. That's a whole nother topic we can discuss.
Well, and then there was another, I can't remember if it was Pilgrim Farms, I'm not quite sure, but they actually came out and said we are sold out of chicken wings.
Yeah.
That's un-American.
Well, it is. A little bit there, yes. Well, at least we're not dealing with that football game where we won all those wings. We don't grill those as much. All right, let's move into, I want you to put your rear view mirror on there. Ryan in Lenox, Iowa, asked us on Facebook, when should we have sold old crop corn and beans this year?
So with the benefit of hindsight, the only thing that would have stuck out that the high was last week was if you were looking at an upward channel line on a daily chart, prices had hit the high end of the upward channel, but at the time there was no topping signal whatsoever. The topping signal did not come until the USDA report day, and then corn did post an outside bearish reversal that day. And then both corn and soybeans started to break below that upward channel that began on March 31st. So once that started to tumble, prices fell, and now here we sit at this Fibonacci retracement target that I keep talking about. So a 50 to a 61% correction, healthy for a longer term uptrending market without question. So the next week to 2 weeks is significant because we're either going to start the next leg higher and take this market back up and achieve the prices that we really could have had or that we saw from 2012, or things are going to just kind of simmer down here for a while until we get a handle on, quite frankly, the acres and summer weather.
So those are the two factors we need to watch to see which way we go?
For the longer haul, but for the next couple weeks, it's tricky because we have not really much for news next week. We're heading into a 3-day holiday weekend with Memorial Day being on the following Monday. And then when we come back in June, then we'll start to gear up for the June regular monthly supply and demand report. And on that one, there maybe won't be too many changes or not. The USDA is very slow to make any adjustments to the ending stocks. So if they don't give us any fresh news, the market just trades the same old, same old. So we need something to spur it.
Well, okay, and I asked you this before we rolled, and I think a lot of people have this question. They'll look at the market during the morning's trading. Mm-hmm. They'll see it from the overnight, then the morning, and then at noon. The last 45 minutes, for the last at least 2 weeks, have been ridiculously volatile and crazy. Is there a reason for that?
Well, I think part of it is that to know which way a trend is going, we always say, wait to see how the market closes that day. And so if things look like they're continuing to trend lower, then sometimes new sellers kind of wait till the end of the day. Or if someone's waiting to become a buyer, they wait to see what the close is looking like, to see if we are doing any different technical indicators. I think that's part of it. I think that just the volatility that we've had all there for the last couple weeks, maybe people are like, ugh, I'll just wait and see what it's doing when I come in for lunch, and then take a look at things and call their broker then. So I think there's a lot of components, a lot of moving parts. You know, when we have the stock market, you know, gyrating, and when we have energy prices, you know, earlier this week, crude oil put in a bearish key reversal, and then today it was putting in a bullish reversal. And so it's just, everything is just in this gyration right now. And the next 2 weeks are going to tell the tale.
All right, I'll leave you with this. One last question. Gary in Fransville, Wisconsin, asked you on Twitter, what has more upside, corn or soybeans, new or old crop?
To which I say, if we could get a additional answer from the USDA on any real tweaks on ending stocks for the old crop, that's what we need to know first. And then, of course, finding out the acres and then summer weather. But ultimately, my thought would be that the November soybeans, those new crop beans, that still is the most bullish story at this time that we have going forward. And then with corn, with all this China buying, clearly there's demand there. You have 2 ethanol plants that reopened in the midst of a derecho area where there's, you know, corn deficit. So there is demand for grain right now. Otherwise, these companies in these countries wouldn't be doing what they're doing when prices are high. So something is truly happening behind the scenes. But to answer the question, I think it's the beans. I think they still have the upside.
On the new crop?
On the new crop.
Okay. And is it weather dependent mostly? If you had to pick one of those 2 big factors that you were talking about, is weather the biggest story that we have to?
Well, yes, it is the biggest story, but there's so much chitter chat about the acres number that we need that piece of the puzzle to know what kind of weather we can deal with, sustain price-wise this summer. Because sometimes if it's hot for a week, the market will say, who cares? But
it's supposed to do that.
Yeah. But sometimes if we are in a situation where the ending stocks are so tight and it's hot for a week, boom, that's enough for a 30-cent rally on corn. So it is going to be a volatile summer price-wise, and potentially it lasts going into 2022, especially if the crop gets smaller, and again, the crops in the northern hemisphere, if they're not perfect. So a new little era here of volatility kind of reminds me of, you know, kind of 2008 to 2012. I saw all those big price swings for commodities, and I think we're starting that same type of a factor.
Is chitter chat, is that 2 T's in chitter and 1 in chat?
Correct.
Okay, just making sure. Tiffany will want to know. Thanks, Naomi Blohm. Good
You're
to see
welcome.
you. Appreciate that. See, you never know what you're going to learn on this show. Next week, though, we're going to look at an old mapping grid being put to use in new ways. And Don Rose, that's 2 O's in Rose, will join us to break down the markets. Thank you so very much for watching. Have a great week.